Hey, Philadelphia area homeowners, do you want to know what happened in the housing market this past month? You're definitely going to want to watch this one. The number one question that everyone asks, every real estate agent that ever existed is, how's the market? What's going on in the market? I've said this many times, and it's so critical because the market is constantly moving. So what I put together here is a breakdown of what happened in Philadelphia, Montgomery County, Chester County, and Delaware County through the first half of the year and into the third quarter. And I'm going to give you all the stats and then tell you what it means for the people that are thinking about transacting, whether it's buying or selling right now or over the next 18 to 24 months. So first off, the number of sales are down 3.7 to 14.8% in the Metro Philadelphia area. Again, sample size, City of Philadelphia, Montgomery, Chester, Delaware counties. So we're seeing less homes transact and less homes sell. The median sale price is up 9.6 to 11.1%. So all those folks that said values are going to go down have been wrong so far this year. Days on market in the suburban counties is ranging 16 to 20 days. That's from the time the home hits the market till a contract gets signed. And in Philadelphia, we're seeing 37 days on market average. Percent of the asking price received. In the suburban counties, the range is 101.9 to 103.4%, meaning on average, sellers are getting almost 2 to 3.5% more than what they're asking for their home. And in Philadelphia, it's 97.3%. That's the asking price at the time the home goes under contract. It does not factor in previous adjustments. Inventory. In the suburban counties, it's moved up a bit. This is actually the first time we've seen this high inventory in months. 1.05, 1.01, and 0.98 months supply. So right around a 1 month supply for Chester, Delaware, Montgomery counties. And in Philadelphia, we're seeing a 3.68 month supply. Major movement there. This is the highest inventory we've seen since the end of 2020. And new listings continue to outpace pending sales in every county and in the city of Philadelphia. Lastly, mortgage rates. They jumped up a bit last month. At the end of June, they were north of 6. Now we're seeing them range between 5 3/8 and 5.5%. So I just gave you a ton of data. What does all this mean? So let's talk about people that are thinking about selling. A couple of pieces of critical news here. Rates have come down a little bit, meaning buyers can afford to pay a higher price. That's great for sellers. In the suburban counties, inventory still right around a 1 month supply. Also great news for sellers. And in Philadelphia, it's jumped up substantially up into north of 3.5 months, meaning if no more homes came onto the market, that's how long it would take those properties to all be liquidated and sold at the current absorption rate. So inventory is still below that 6 month even footing threshold for buyers and sellers. Inventory is rising. So sellers, if you're thinking about making a move, I'd be looking at accelerating that time frame so that you can take advantage of these lower inventory competitive situations, because the best time for you to have your home on the market is when the neighbors don't. As that continues to rise and there's more competition, you're not going to see as favorable terms and prices may be negotiated more. So we're seeing this really move the other way. Now there's lots of great news. Prices are continuing to go up. There's less homes transacting, so there's less opportunities for buyers, and inventory is increasing, which it's really supply and demand. You want to be on the market when the neighbors aren't, when there's high demand, low supply. So you're still ahead of the game here. I wouldn't be banking on that as we head into 2023. So I'd be having conversations now if you're thinking about moving and moving up your time frame if price and terms are important to you. For buyers, there's good news. The first time I've seen this since the beginning of 2020. Inventory is rising substantially. You've got more choices on the market than you've had in a very long time, and rates came back in your favor. So while they've gone up from historically low numbers, and we're still seeing prices go up, we're seeing that the cost of money went down a little bit into that 5 3/8, 5.5% range. That's way better than 6, and that's going to lower your monthly payment on the same priced home. What we're also seeing is that for sellers and for buyers, I'd be looking at paying the price that a home is asking in the suburbs or pricing your home where you think it's going to sell for on the listing side versus the buy side. People are able to negotiate a little more than they have been with inventory rising. We're not seeing a lot of movement on pricing, and the best strategy for sellers looks to be to list your home where you think it's going to sell for. And buyers, if you see a home that's priced right, don't mess around. Be quick to act on it and make a move and make an offer if it's something that you're interested in. And that's what's happening. We're starting to see this shift the other way. We're still in this shifting climate right now. All the more reason, if you're thinking about a real estate decision in the next 3, 6, 9, or 12 months, talk to a local agent and get some expert advice. You're definitely going to want to watch this one.